Hello everyone, welcome to another weekly market review. Today is the 13th of January 2020, and what I'm going to do this week is try to squeeze as much actionable information as possible for you in as short a while. So the objective is to be efficient. So total market cap, it has manifested a bullish scenario scribble, which was to take out this weekly level and close above it. We had a very strong week last week, and quite clearly we have closed above it. Currently we are sitting on the next weekly resistance. So this chart on the weekly time frame, I think it is absolute gold, guys. If people are confused, they can be, but for me this is a reclaim of a level on a higher time frame. All we need is for price to come down, test this as support, and for support to hold. And the other scenario that we can see is that if we do make a consolidation, hold this, we make the next leg up. So the bullish scenario we were looking at, it is playing out for now, and we would like this 200, these highs 200 billion to hold for it to continue. But essentially the week, we want the VIX to come down maybe till 200, but the week should close above 205 billion. So this is looking good as a reversal, guys. It's still early, but we have reclaimed a major resistance. You can see we did not do that before. Even on the China pump, the previous resistance, it remained as resistance. We did not close above it. You can see in the previous market cycle, it's the same thing. We had a floor, we tested it. We had another floor, we tested it. We never closed above weekly levels. So currently we have done that, and that for me is bullish. That for me says that it is a probability that this is going to hold. The probability has increased. So what I would like is the strategy to test this level and buy these dips, guys, because you'll have a good point of invalidation. If 200 billion is lost, then you will have a great place to manage risk from. For altcoin market cap, this is the fractal that I've been watching, and you can clearly see all we did. We had a strong downtrend, another move up, and a smaller retrace of that move. So it's basically a consolidation before a new trend. So what have we done? We've made the big downtrend, we made another small leg up. What was the confirmation here? This is on the weekly time frame. We had a reversal on the weekly. We had a strong move up, and we broke the previous weekly level. We did not do that all the way on the way down. We had a strong move up and broke this previous weekly level right here. So what have we done right now? We had a strong move down, and this was the weekly level to break. And if we zoom in, you can see that we have clearly done that. So expecting a smaller retrace for the altcoin market cap, and a weekly close above the 690 level. This is charts.coin trader, guys. This is the site where I'm charting this. So these levels, just use this site because it has different data on TradingView. So if we hold 69, this is going to be really bullish. We can have VIX all the way down to even 67, 66, but this is a reversal on the weekly time frame, guys. Last week has changed a lot of things, but a 3-4%, 5%, even a wick down, that can do. But you can see we've taken out the strong weekly level that we were looking at. Here's Bitcoin on the daily time frame, and what we have is two ranges here. Now what I want to show you is the previous distribution range. We broke down below it, consolidated, made a swing failure, and broke back into it. We were consolidating at the bottom of the range, and then we broke below instead of finding continuation. And because we did not, we retested it. This was a nice place to be short, and we broke back below the previous range. And currently what we did is we consolidated below it, made a stop run here, and now we've broken into this range. We're finding resistance at the middle of this range, and what I would like to do for our plan for Bitcoin is, so you watch this on the, you're watching it on the 4 hour now, and what we want is for price to find support on top of the middle of this range, and this should not be a strong move up. If it is a strong move up which has a harsh rejection, which means we make a swing failure pattern, this will be a nice place to be going short. If you do go short, then you have your first target, which is 8,000. The second target is the bottom of this range, 77.30. And if we do break below this, you can be compounding your short and targeting first this breakout point right here, which is around 75.20, and your second target can be the yearly open. So for Bitcoin, what is bullish is that we've consolidated, built a swing failure pattern, and we've broken back into the previous range. What I don't like so much, for that, let's look at the ADX for momentum. What I don't like so much is the way this momentum is rising. I want to go back to April, where we had a consolidation and we had a strong break above it. Just look at the slope of the ADX. This is a very strong move, and you can see that the ADX was not only steep, but it moved very fast. And you can see we had another part of a consolidation where the ADX moved up slowly and slowly dwindled away to a sideways pattern. So if you look at this, we already have the ADX, which is now sloping sideways. It is not moving up as quickly as price should have if this was supposed to be a strong impulsive move. So we are still in somewhat of a consolidation where we have broken the lower part of a range. You still want to be cautious here. And for the ADX, what I want to show you is the weekly time frame. So on the weekly time frame on the ADX, you can see this is the last consolidation that BTC had before we made another move down. What you can see for an ADX reversal, and here we are, this is in April, this is the previous pivot, price broke above it very strongly, that means we made new highs, and ADX was also rising above 25, the DMI positive was also rising above 25. This is a breakout and this is a consolidation where you need to be going in strongly, expecting a continuation. Here what you can see is that we have just about touched the negative DMI. The positive DMI has just about touched it. The ADX is still declining, and it is somewhat looking similar to these consolidations. What you want for price to be bullish is for the positive DMI to break out of this 25 level and take out this negative DMI pivot. Then we can say that yes, on a higher time frame, we still have a good potential to be trending. If this does happen, the ADX will turn and will begin to rise. But still guys, if this has to be a move on a higher time frame, you want the positive DMI to break out and break up below this, and on the daily time frame you want the ADX to start rising again. It is slowing down over the last couple of days. You want this DMI continuation to take place and for the ADX to start rising steeper. And in terms of price, this is exactly what our plan is. We want price to start finding support above the 82.65 level, and if we do, we can trade it up to the 8800. If we find a swing failure pattern, you can trade it down to the bottom of the range and then to the yearly open. Want you to take a look at this chart that I have drawn out for Bitcoin, and this is basically the starting of January Why we have a dump in January is seasonality for Bitcoin. It's basically a lot of miners who are in China, and the hydroelectric power gets expensive, and this is the time we have sell pressure. So traditionally every year, 2014, 15, 16, 17, 18, every year we've had a bit of a sell off because there is automatic sell pressure because of this fundamental aspect. And right now you can see 2020 we've only had a 9% move down. So what you would want is for either price to follow this pattern. Also the thing is that in none of these years was the halving this close. The previous halving 2016 was in July. That was quite far away from January. So it is possible that the fundamentals of the halving are playing out on the chart, and something that Bitcoin has been doing since 2014 may not happen again. But do keep this as a possibility that this is the time where generally there is sell pressure. And very interestingly, if the miners are not selling at these prices and this sell pressure is not reflecting, this would be very bullish for Bitcoin. Here's the Dow Gold on the daily time frame. Nothing much has changed since last week. We did expect this move down. Price has found support over this daily support, but if we do still consolidate, you want to look for a breakout of this if there is to be continuation, or else you see the consolidation and we follow the plan from what was shared last week, where we do get some kind of a consolidation and a final move down. This would be the distribution in indices and possibly a small move up in gold, but this would make a very nice bullish continuation wolf wave. Nasdaq on the 4 hour, it has reached the circle I had drawn. This point of big resistance, at least by my calculations. I have come upon these calculations using Fibonacci, and basically this is where we got the swing failure pattern for the beginning of this move. We did have a nice swing failure over here as well. So currently I'm still looking for this point to be more about distribution rather than accumulation. I would say that if we do start finding support above 9,000, 9,100, I would get bullish again. But for me, currently we are in distribution, even though a higher time frame price has nothing to suggest for it. But the decline in momentum, the decline in the length of impulses, and my Fibonacci calculations has me say that we do have some kind of a resistance over here. And if we do start finding support above 9,100, I will look for further upside. Until then, this is a seller's market for me. Oil hit our target really well last time, and I'm just going to remove these. And what we were looking for was price to find support at the 60 level, where we did not. We broke back into the channel, and currently we've broken outside of it and below it. I would say that if we are really bullish, I'm just going to put out a fib here. Okay, that has very nice confluence. The 0.5 level, which is also a monthly support at 58.2. So if we are bullish, I think this level should hold, and if we can build some kind of a swing failure pattern and a reclaim of this would be a nice long opportunity. If you do want to be safe and you want to catch this later, then you should be looking for price to find support above this 60 level to trade it back up. So this has been a strong move, guys, and this is just a corrective move of this strong move. And if this move does have strength, either first the monthly support level of 58, if this does break down, then this is the weekly level. I think if it's breaking down below this, it's kind of getting crowded, guys, especially this 58. I think this 58.2 should hold, otherwise we should be looking at this next monthly level at 54. So this is the play for oil. Here's gold on the monthly, and this is exactly where we were looking for resistance. Price was pretty bullish. It went all the way to the top of this block, but we did find resistance here. So the monthly open 1517 I think is going to be strong support. If this is a continuation and we're going to find strength in gold, this level should hold. It's a very key level. Let's look at the daily time frame. So on the daily time frame, we have made this. There was this channel here. We made a powerful impulse out of it. Just gonna draw out some fibs to see if we have some confluence. So we have very nice confluence of a 618 level at this monthly support. So I think if gold is very bullish, we should be definitely holding this 1517 level. And currently, after a big move like this, the first daily support is holding, but I think it's okay if we do end up breaking that, have a wick to the monthly. And I think if we still just hold this level, which is the top of these highs, and consolidate, it would be very, very bullish. Let me look at the fib again. So yeah, this is the 382, and essentially it would be very bullish for price to hold the 382, and this would reflect a strong continuation of this rally, at least to these yearly highs. 1675 is a big target for gold once we do find support above these levels. So the play, I think, should be to wait for this consolidation to play out, and if price does head towards this monthly open, this would be an aggressive buy. I think buyers would be stepping in. So keep a lookout for gold, guys. Just set some alerts at these levels and wait for this consolidation to play out. The bullish scenario, if we start finding support into this block, I would want to go long up to this yearly open. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!